Right, everybody, ladies and gentlemen, hello and welcome here to us at Nadex. My name is Philip and I'll be once again your presenter for today's webinar, Market Movers for the 25th of July 2017. As usual, if you have a look at your webinar interface, you should be able to see that small questions box, and please put any questions that you might have into that box, and I'll do my very best to answer those questions as we move through the webinar. Right now, I would appreciate very much if you guys could give me a very short yes or why in that box to just let me know that both the audio and the screencast are working properly. Just a second. All right, we seem to be perfect. Thank you very much, everybody. Really appreciate it. As usual, our webinar today is scheduled to run for about half an hour. And of course, before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time and read through them to make sure that you're really comfortable with them. Essentially, this says that trading, of course, involves risk, and that you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither TradeWith Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live market analysis, live charting session, the major part of today's webinar. If I say I think a market is more bullish or more bearish, or there might be a buying opportunity, that's just my opinion. It's never a trade recommendation, it's always just educational purpose. If I'm placing a trade, I'm doing this as well with an educational intention and background. I do not suggest that you follow me in those trades. I will explain why a certain setup is just not there or how the trade might be improved. But again, it's really just educational purpose. So please make sure you're okay with that. Furthermore, we also have a risk warning, this time coming directly from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's have a quick look at our agenda. We want to have a look at the markets. We want to see and understand what we're seeing on those charts and what the markets are doing right now, and we want to approach those markets with our trading strategies. I want to have a trading strategy because I don't want to trade from a gut feeling. I want my trades to be comparable. A very important part of trading is, on becoming a successful trader in the long run, is to understand that it's never about the next trade. One trade doesn't mean a thing when it comes to trading. The only thing that is important for you is a large sample set of trades, and in order to be significant and in order to allow that strategy to manifest its edge and give you that advantage that you are seeking in the market, those trades must be comparable, and they are only comparable if you're always following your rules. So you should always apply the same technical analysis. You should always apply or fundamental. If that's your game, perfectly fine. I don't want to suggest the fundamental is weaker or better than technical analysis. You have to find something that works for you. But if you have found your game, stay with that game. It doesn't make sense to change the rules all the time, because then usually you get the worst of everything. But if you have your strategy, if you have your game and apply the rules and just hang in there, the edge that is within that system will start to manifest itself. And after a large sample set of trades, you will know what's your win-loss ratio usually, what's your average winner against your average loser, all those things coming together. And with a proper trading strategy, you should be able to win more often than you lose, and there will be losing trades. Those guys who tell you losing trades can be completely avoided, I think that's complete nonsense. It doesn't make any sense to me. I could apply my most perfect technical analysis and still have a losing trade on. That's how the game works. The strategy gives me the opportunity to win more often than I will lose, and the winners should be bigger. And today we want to have a look at the markets and see how we can implement those strategies in the markets, and then also trade those potential opportunities with Nadex contracts. So that's the big idea for today. And let's just jump in here directly into our, let me grab my charting package here. Here we are. Right now, I want to focus here on euro against the US dollar. And you can already see that the euro-US dollar pair has been pretty strong. Let's get started here on the monthly chart first. I like to start with the higher time frames to give me an idea of what the markets have been doing in the past and where we are in the historic context. And what I can see now is that we have been in a strong downtrend, but however, just recently, although markets made a new lower low here, we can see our indicators did not follow suit. Actually, we got a bullish divergence setting up here because the low that we got here, it was a lower low compared to that one before, was accompanied by a higher low both in MACD and both in RSI. This is called bullish divergence. This has been setting up here, and sure enough, price has pushed higher, has tested this level that has been established here sometimes way in the past, more than 10 years ago, and also retested here just recently, at least on the monthly chart. And now we are about to break out of this level. And sure enough, this bullish divergence was an early indicator that this move to the downside might be over. Price is still pushing higher, pushing strong. Technically, we have made a lower low, and now we see a higher high. Right now, it's a tough call to say if this is not an uptrend, this is nothing at the moment. Because for an uptrend, we want to see a higher high, a higher low, and another higher high. So if this pullback here would have taken us just here to those levels roundabout, then we would be in an uptrend already. But right now, it's a lower low being followed by a higher high. It's no man's land. However, I see a lot of good, strong, bullish momentum in this market. We have this bullish divergence in both our indicators. So the monthly chart, although not trending at the moment, is giving me a definitely bullish interpretation, bullish vibe to the to my analysis. Let's have a look at the weekly chart. And on the weekly chart, I already have my uptrend. On the weekly chart, I can see that we have started to make new higher highs. We see a higher low, and from then on, this was roundabout after we made a new higher high here, 5th of May of that year. Since then, the weekly chart clearly is an uptrend, and we start to see that we're pushing higher and now right about to test this level. In a good, strong uptrend, what I always like to see is that my moving averages have started to fan. You can see that the 10-period moving average, and let's make it a little bit larger. I know some of you guys have some issues there sometimes if the chart is too small. By all means, if something is not clear, if I'm talking too slow, too fast, and take some things for granted, please let me know, and I'll do my very best to answer your questions and explain and give you more details on what I'm telling you here. Higher highs and higher lows, we see the fanning pattern, 10-period moving average above the 20, now above the 50. The 50 has turned upwards again. It's starting to go in the same direction. Obviously, the 200 is still above there, but those three already have started to fan. They're moving in the pattern that I intend to see. And so overall, the idea here is prices might be going higher. But right now, we see that we are also overextended. The distance between our moving average buy zone, 10, 20 period moving average area, is the distance between where price is currently and the location of that area. It's a large distance. It's a great distance. So every time price moves away from that area, you see it takes some time, or it immediately starts to retrace to come back to this area. So if price is currently here, the idea is we might see a pullback that takes us back to this moving average buy zone, or price might start to move a little bit to the sideways until this moving average buy zone catches up. Does it have to be like that all the time? No, it doesn't. But with our research, with our own trading, we have found that every time we're trying to trade at those locations, we have a greater risk of that trade going against us than if we waited for price to come back to price levels of equilibrium, where things are much more relaxed and we get a potentially good trade location. around our moving average buy or sell zone. So here, the weekly chart, we are overextended, and the candle itself, it's just Tuesday today. Obviously, it's that week has still a lot of time to do things. But if today was Friday, close of business, close of trading, and we saw a candle like that, I wouldn't like the shape of that candle at all. Because what we can see here, this is a rather, sorry, I lost the words. It's a rather indecisive candle, more turning towards the bearish side. So why do I think it's indecisive to bearish? Well, what we can see here is we have a larger upper shadow. The upper wick that we can see here on that candle is rather long. It's much longer than the lower shadow. We have a very small body. It's almost a doji, and this body is more towards the lower end of the session. So what this shows me here is that buyers tried to push price much higher, but in the end, they, at least until now, they haven't succeeded in doing so. Sellers came back strong and have been able to reverse all that buying by the bulls. And right now, we're sitting just where we started. So market has rejected this whole move to the upside, and therefore, currently, this candle looks rather weak to me. The overall trend clearly is an uptrend. This candle looks pretty weak right now, but again, it's just Tuesday, so we have to wait a little bit more to see what's going on there. Coming down to our daily chart. On the daily chart, once again, it's a beautiful uptrend. You can see that this fanning pattern has been in place for quite some time. This pullback here took a little bit longer, but now once again, we see higher highs, and we are overextended here. And how is this overextension being fixed? We're pulling back to a moving average buy zone. We're getting small, indecisive to bullish candles, and from there on, it's off to the races again, and prices are going higher. Right now on the daily chart as well, it looks like we are again a little bit overextended here, and the price action for today's candle, pretty much the same thing than what we saw on this chart for the weekly. We see this long upper shadow, and this shows a lot of weakness to me. Currently, again, it takes that session is still going for a few hours more, and for that reason, I'm always waiting for my candle to close in order to give me an idea. The shape and structure of that candle might be changing any minute, and so I always wait for the candle to stop printing. Currently, the structure is definitely on the bearish side. Long upper shadow, all this move to the upside, and let's make that larger again. All this move to the upside has been rejected by the market, and we are overextended, and I don't think that a pullback here into our moving average buy zone is that unlikely. That's just me. I don't have a crystal ball. I don't know a thing. It's just my experience, and just according to our strategies, true to the letter, I would not try to trade this retracement, because I know that if I wait for the retracement to happen and get my small bullish candle setting up here for potential long trade, that this trade has a greater probability of working out for me. Will it work out for me? I don't know. Nobody knows. We have to wait and see. But I know that this counter trend trade that many of you might be thinking about now, while totally viable, you have to accept that this is usually comes with a lower probability of working out, because in that scenario we are trading against the major market momentum. Everything in this market is shooting and pushing higher. The monthly is going higher, the weekly is going higher, and the daily, the big current in the river, clearly goes here to the upside. And we try to profit from a small counter trend move. So keep that in mind. However, on the daily chart right now, it's no trading opportunity for me for a long trade, because we are overextended. So what you might consider is going to lower time frames and then start to have a look around for ideas on how this counter trend trade might work. And if we drop down with our time frames even further, looking at an 8-hour chart, 4 hours, 2 hours, 1 hour, and 15-minute chart. On the 15-minute chart, we start to see the price has now clearly made a lower high and has started to make new lower lows. So the trend already has changed. Those moving averages are not yet there into place, but the move here is more towards the lower side. So let's make that chart here a little bit larger and start to have a look, for example, not a 15-minute chart, but a 5-minute chart. I feel that a major lesson has been learned once you are able to look at a market, look at a chart, and to understand the way that those time frames are interconnected. What does one time frame look like on another one? Or what does one market look like on another time frame? And if you start to play those time frames, looking at the 15-minute chart, I was pretty sure that the 5-minute chart would be looking just something like that. And we see here this pullback into a moving average sell zone on the 5-minute chart. And if we get a small bearish candle setting up here, according to your rules, that could potentially qualify as a potential short trading opportunity. Now, Joseph put us a great question here. Just let me read that question to you. Hi, Philip. I would like to know, based on your experience and knowledge, what is the best chart time frames to observe and evaluate for trading the Nadex 5-minute and 20-minute binary options? Also, what are the best indicators for these two very short-term momentum trades? Finally, what do you look for in these suggested or recommended indicators? Thanks. Joe, thanks for that question. Great question. I'm always looking at the same indicators. I'm always looking at my 10, 20, 50, and 200 period moving average, SMA or EMA, that's completely up to you. I'm looking at MACD with the standard box settings of 12, 26, 9, and an RSI, relative strength index, with a setting of 14. It's the same thing. I haven't changed my indicators, moving from the daily or from the monthly now to the 5-minute chart. And if I want to trade those very, very fast moving contracts, the 5-minute and the 20-minute binaries, as you've mentioned here, first thing, I don't trade them. I'm getting old by now, and I like to plan my trades and to have a little bit more time on my side. So that being said, but if it's a 5-minute trade, why not look at the 1-minute chart and see what's going on there? Much too noisy for my taste. I don't like that kind of fast move, but 2 minutes also already starts to look, already starts to look a bit cleaner. And honestly, here, this 5-minute chart and this small candle setting up here, I would feel quite comfortable trading that one right now. And now that I have identified a potentially tradable opportunity, now I'm switching to the Nadex platform and see on how I could be trading that that market. And Joe, it's the same interpretation of those indicators. It's always the same. We always like to tell people our strategies are applicable to any market and any time frame. Recently, I had fun analyzing some Bitcoins and other cryptocurrencies. I applied the same indicators, I applied the same strategies, and it's just fun to see how those strategies work independent of market and time frame. It's just a matter, you want good liquidity, you want moving markets, you want volatility, but if you have those, it's always the same. Now, just have a quick look here at the Nadex platform, and guys, I'm using here my demo account, and just keep in mind, if you have signed up for your demo account and maybe you have forgotten how to log in, on the login page, here is this button, forgot your login details. Just hit that button and you fill in a small form. If you have forgotten either your username or your password, you're up and running again in no time, so no need to give support a call for that one. Just fill in here or sign up for a demo account if you haven't already done so. Now let's have a look here at which contracts are available for trading. And the idea here is I get the small bearish candle and I assume the trend might be continuing. So let's have a look here at forex binaries, and I'm looking at euro against the US dollar. And let's have a look here, for example, at the daily 3 p.m. I just picked any time frame now. I'm looking here at an option which still has 2 hours and 41 minutes left. When it comes to trading options, you have to understand that at expiry, and you see how much time is left in those options, that's judgment time, that's judgment call. At that point in time, it is decided, okay, will we have an option which is in the money, or will we have an option which is out of the money? We'll look at the strike price, and the market, the underlying market, has to trade above the strike price in order for that trade to be profitable, with a binary to settle for $100. If it's not in the money, it will settle for $0. Now, let's have a look here at where we're trading right now, 116.540, and I think if price might be going lower. Again, it's just an educated guess at that stage. I don't know. I might be looking and trading maybe this contract here. And let me just have a look here and try. I'm trying to sell now. Let me sell those contracts here and place the order. And you see the order is currently working, and I'm waiting for that order to be filled. Now the question is, Philip, why did you pick that contract and why did you trade 10 contracts? Why? Tell me more. Okay, sure, no problem. Let's have a look at this one again. First question, why? Let's have a look at trading one contract. This contract is currently trading at 80.75 to 86.25. The idea for a potential short trade here is that the market might be coming down. Obviously, I want to sell something now for a lot with the potential to either buy it back later on for a little or even for price to settle below the strike price of 116.40, which would be something around here. And if that's the case, that contract would settle for 0, and I was to keep all those 80 bucks 25 cents which I just got for selling this contract. So my maximum profit is, perfect scenario, I get to keep everything that I got now for selling this contract, 80.25. My maximum loss, however, is if the market decides, or the underlying market settles above 116.40 at 3 p.m. in 2 hours and 38 minutes, then I would have to settle this contract for $100. And this means I got to keep the 80 I got, but I have to pay 100, so my maximum loss would be 19.75. Now, why 10 contracts? You must make sure with your trading, or it's highly suggested to make sure that you take the same risk exposure on all of your trades. Your trades should be comparable, because only then it doesn't make sense to have one losing trade wipe out the gains of 10 winning trades. In a perfect world, you are winning more often than you lose, and you are making more money on each winning trades than you lose on a losing trade. And to achieve that, we must make sure that we have the same risk exposure on every trade. And what I like to do personally is, if you look here at my account value, I'm looking here at $21,000 in my demo account, and I always try to risk about 1% of that account size. So my risk per trade should be something around $218. And the trade that I just took here with 10 contracts, maximum loss $197.50, which is pretty close to those 217 or 218, and this would have been. I could have even traded one more. I'm always shooting for around about a potential maximum loss, which is in line with 1% of my account size. So this explains why I wanted to trade those 10 contracts here. And we see that the market has started to move a little bit in my direction. Now, I have two ways to manage that trade potentially right now. One thing is I'm waiting for price to come down there, and if it's there, perfectly fine. I pray that it is still below the strike price at expiry, and that's it. If everything works out, I made a decent profit on my trade. By the way, what profit would I have made? I'm going to keep those 80 bucks per contract for a risk of 20. That's a reward to risk ratio on the trade of 4:1, which is absolutely great. I'm looking for a reward to risk ratio on my trades of at least 1:1. 4:1 is outstanding. But the downside is, let's have a look at that contract here again. You can interpret the mid price of the bid and offer, which right now would be something around $82. You can think of those 82 as 82% that the market thinks, the rough probability, rough estimate, not exact science, statistical model, and so on, 82% probability that in 2 hours and 35 minutes, the market will be above that, above the strike price. Then we have a potentially, if that's the case, we have a losing trade on our hands, because if we sold this contract here, we're looking for the market to settle below the strike price to have a potentially profitable trade on our hands. All right, so we see the market starts to come down a little. I want to manage this trade. how can I manage that trade? Well, I could be just clicking here on that contract. It opens up again. And now I could be putting in a limit buy order. And I'm looking, I sold 10 contracts. I'm looking into potentially buying 5 contracts if the market starts to come down to a certain price level. And I sold at 80.25. And I'm willing to take 5 contracts off if the market drops down to maybe 61 as a price. I place this order now, and you see this is how I would manage that position. I'm taking a part of my position off. I'm locking in some profits on those 5 contracts, and therefore my total risk exposure could be either eliminated once the first profit target has been hit, or I could be I would have reduced my risk exposure there, and I still have 5 more contracts to maybe go for the full potential that might be still in there. So that's the idea here. Devin is asking about if a recording is available. Yes, I think the guys from Nadex are recording that session, and it should be available either on their website or the YouTube channel. I don't know exactly, but I think it should be available on the website. So Devin, you should be sure to go there. All right, so once again, this is just the idea that this is for educational purpose. It's not a trade recommendation to follow. It's not something which I recommend. It was just something that was setting up here. Now, to just balance things out, why not move to a different expiry cycle and think we have agreed that the overall picture might be to the upside. At least that's what some aspects of the chart suggest. And if you say, this temporary retracement here is not so interesting for me, I'm looking for the big picture, then you might think about maybe buying that contract, buying because you want to be long the market. And let's get this right. You are not long the market. You're speculating that prices in the underlying market increase. It's important to understand that you don't have a position in the underlying market. If you trade Nadex contracts, you have an exposure to those markets. And so let's keep that in mind. And again, we might be thinking about potentially buying this position here. Much more time left in this option life cycle. What is the probability from Mr. Market that this option might be potentially successful, might be potentially in the money at expiry? We take the mid price of those 2 prices, which is something around 40%. Again, 40%, much better than the 20% we had before. But now have a look, my maximum loss is $45. What I'm paying for this contract, my maximum profit would be $55. And so the reward to risk ratio is definitely more in line with the probability here. On the previous trade, I had a 4-to-1 potential reward to risk ratio if things work out my way. And on this trade, it's just a little bit above 1-to-1. But I got, instead of the nice reward to risk ratio, definitely here a more attractive probability that this trade might be working out. So let's just place that trade here as well. And the order is live. And yeah, we're good to go. So that's it here for the euro against the US dollar. I just have about 2 more minutes left, and I still wanted to show you guys the Russell 2000. So I really have to speed it up here. And yeah, let's get started with the Russell. The interesting thing about the Russell, and let's get started here with a weekly chart, is we have been in this trading range here almost since forever. And let's put in another level here. While the Nasdaq has been rallying and has been pushing higher, the Russell was really just sitting there. It showed more signs of weakness than strength, and kept on going. But here just recently, we see some momentum coming into both RSI and MACD. We've seen several retests here and now a breakout to the upside. And on the weekly chart and on the daily chart here as well. And if we put this about here, you see we have a touch of this level here, and pretty much here and there and here once again. And here we start to see we are running upwards to test the breakout, coming back. Now we get the breakout, but immediately price comes back to retest this level once more. And here we get a small bullish candle. It could be smaller, but it's still small enough. A small bullish candle setting up here. rejection of this or market reacting to the support level here, we start to see the fanning pattern here, trend in place, and sure enough, this level holds, and today's price action is just pushing higher. Again, good support and momentum here. So currently looking at the Russell, me personally, I'm way more bullish here on the Russell right now than on those previous weeks. Why? Just because we've cleared this level. This level has been tested. This is a pattern you can see almost all the time. Breakout, coming back to test this level, and then trend continuation. And so the natural thing for me to do next would then start to look at the lower time frames here and try to identify any potential trading opportunities. The pattern that I'm looking for here is always the same. Breakout, pullback to my moving average buy zone, small bullish candle setting up, and trend continuation. And yeah, trading them with the Nadex contracts just as you've seen them. Now, just one more question from Joseph. Joe is asking to confirm that you use the same moving averages for both short-term momentum and longer-term trades. Yeah, sure. I'm using the same moving averages on all charts. No distinction, no separation, no parameter tweaking. 10, 20, 50, and 200 period moving averages. The interpretation is the same. I don't care at all about if they cross each other and or what's going on there. I just want to see my fanning pattern. They help me to identify a good trade location with regard to the moving average buy sell zone. And that's it. They are just an instrument to assess trend strength and help me find good trade location. And it's the same if I was looking at a 1-minute chart or a monthly chart, always the same. All right, so time flies, and I've been talking too much again. Sorry about that. Thank you very much for tuning in, everybody. For me, again, it's been a blast. I really enjoy doing those sessions for you. I really appreciate you asking questions. I think asking questions is vital for the learning experience. And yeah, I would love to see you again next week, and same time, same place. If you have any further questions considering Nadex, their products, the platform, and so on, here you have all the different ways to be in touch with Nadex. They're more than happy to answer your questions. And yeah, just as usual, after this webinar, there should be a short survey, and any feedback that you have for us in order to improve those sessions for you, we would really love to hear your feedback on that. So once again, it's been a pleasure for me. Thank you very much for attending and the great participation. And now to all of you, have a great day. Happy trading. Catch you next time. Thanks again, and bye-bye.